Hello everyone, welcome to today's video. So today we'll discuss about whether recession is going to come or not. Before I start the video, please understand that I'm not going to point throughout any point in video that recession is going to come or not. It's not a conclusive statement. I'll give my research, some data points, my own opinion. Based on that, you can decide, you can understand whether it's going to come or not. Nobody in this world right now can tell you whether it is coming or not, at what time it will come, or by what time it will not. But the data points can only give us an inference into the information based on which we can plan our future. So this video is only for that purpose. So let's start the video. Now, before I talk more about the points and everything, I'll show you few images and those images will give you some clarity on how things are happening in the global market. So if you look at this image, it says Nasdaq index marks worst monthly drop since 2008 financial crisis. Tech heavy stock benchmark dropped 13.3% in April as investors braced for higher interest rates and slower growth. So you've seen they're comparing with 2008. So we all know what happened in 2008. There was recession everywhere, people losing jobs. Somehow the people who were getting jobs, they were getting very less paid for the jobs. Like a software engineer was getting around 2 lakhs, which is around 3.45 or 4 lakhs right now in the current. So if you look at this chart, this is for Nasdaq for last 20 years. So pause this chart for a moment and see the pattern. There's a crash in 2009. Then the market started moving up. Then the crash in 2020. Then market started moving up significantly. And now the market is dropping a little bit. So this is for Nasdaq. Now let's look at the Sensex. 2009, there's a crash here. Market started moving up. 2020, there's a big crash. Then market moved significantly higher and now the market started correcting. Now if I put this charts together, this is what it looks like. If you notice the pattern, goes high here, goes down here, goes high here, goes down here, started moving up, crash here in 2020, there's a crash here in 2020, then market moved significantly high, very fast, and then now it's dropping. Here also started correcting. The drop is not as bad in Sensex compared to Nasdaq, but is India follows the market of US, it doesn't go in the same time. So whatever happening right now, that is soon going to happen. I'm not saying it's definitely going to happen, but if you go back to the history and see, then this is how the pattern will look like. So these two charts overlap each other. If you put them together, you might see a similar kind of pattern. So that says how much India market and US market correlates with each other, and that says how much the impact of US economy is on the Indian market also. So now let's look at some of the data points, understand what's happening in the US market. So the US citizens are saving 6.3% right now, which is 10 years below the average. But in Q1 of 2020, that is April 2020, they used to save 34% of the disposable income. That means if the disposable income is 100 rupees, they are saving 34 of that, through which they paid all their debts. There were some kind of stimulus also from the government. Using that, they put a lot of money in the equity. Equity market also went up. They made a lot of money also out of equity. Whoever invested, but whoever don't invest also, they have paid their debts and everything. So everything was looking very good. Now in 2022, as I told you, 6.3% is the savings for the US citizens. That is below the 10-year average. And the cost of borrowing also is going high because inflation is going high in the US market. The inflation right now is 8.5%. US citizens are also borrowing a lot of money from the banks and everything. If you see the report, almost the borrowing increased by 5x. That means the borrowing increased 5 times more, and the credit card utilization has been increased by 20%. This is reported by Moody's. Some major banks like Wells Fargo, Citibank, and JP Morgan Chase also reported this particular number. So there can be two scenarios now. Either people borrow a lot of money to beat inflation, or they're not able to survive the inflation. Let's look at the first number. Why they'll borrow to beat the inflation? The way inflation was increasing, like from 7%, 7.5, 8, 8.5, people are worried. So they want to make whatever the purchase they wanted to make, especially big purchase like buying a car, buying a house, now itself, so that when inflation increases, they can protect their money. So that is one reason that might happen. Second thing is the inflation is so high, they start spending money from the savings because their earning is not enough to beat the inflation. So that is the second scenario. Now nobody knows why they are doing it, still data is not out, but this is what is happening. Both can be true, but if the second one is true, that people are trying to beat inflation, that means they're losing money from their savings account, or people are losing money, that means people are becoming poorer. If also the first scenario happens, like second scenario happens, that means they're trying to make big purchase. Now when you make big purchase, suppose car and house, you buy on loan. So if you buy a car on a car loan, buy a house on a mortgage loan, there personal loan in India, that times you put EMIs every month. So now what is going to happen next? We all know Federal Reserve is going to hike the interest rate. So when the interest rate is hiked, cost of borrowing becomes high. So when the cost of borrowing becomes high, people cannot borrow, and it reflects on the mortgage lending rate also. So whatever houses they have bought, cost of paying repayment of the houses will also start increasing, and that will start impacting their overall mortgage scenario, right? So you cannot pay back to the banks because the cost has increased and then your income has reduced. So it's like both are going in two different directions. This is what might pan out in the future, that there's a crisis over there where people are not able to pay back money to the government or banks whatever they have borrowed. So that will lead to again a crisis. This can be one more scenario. So two scenarios we discussed. First, people will run out of savings because they want to beat the inflation. Second thing, people will buy things on loan which they cannot repay because of this particular cost of increase in cost of borrowing. So now let's talk about what's happening in India. Because the fuel price increasing, the cost of logistics has increased, the cost of vegetables and fruits in the market has increased, the cost of FMCG products has increased because raw materials prices have increased, then the cost of your living also increased because all these things which moves around us are increasing. Indonesia's banned export of edible oils because palm oils basically, because of which edible oils price also increased. So these small increases overall impacts the population, living population in India. So this increase in price will reduce the spending power of people, and this will further impact the sales and volume of the FMCG and other related companies, because the volume will not be much and their margins will get contracted because of increase in raw material prices also. So when demand is less, there will be impact on the supply side also, because the companies will not able to fulfill that demand, so they will reduce the supply. So when they reduce the supply, this will impact the employment also. So unemployment rate will increase. So you can see where this is leading to. This is leading to a domino effect where the impact on the demand will reflect on the impact on the supply. So when supply is getting impacted, that means manufacturing will be reduced. When manufacturing reduces, the employment also reduces, which will lead to unemployment. I mean, lead to the rise of unemployment, and that will eventually lead back to the demand also. That means more and more people will be unemployed, and more people will have less money to purchase. That means they will eventually reflect in the company's sales and revenue, where they can't sell more because there's nobody to buy. So this is a kind of deadlock situation where, because there is no demand, supply reduces, and because there is no supply, manufacture reduces, and because of which the unemployment increases, and again that leads to reduction in the demand. So this is a complete cycle where breaking the cycle is very difficult unless until you put money in the market, and money is not going to come in the market because just 2 years back US has got a lot of stimulus, which is not going to happen again very soon, and that will lead to market crash or what we call recession from the terms of unemployment and everything else. So as an investor, what we can do? There was a video made by me where I told you to protect your money. So protecting your money will only help you to save it for the future purpose. So what we can do is we can diversify our investment. So when I say diversify, I mean if you put all your money in equity, you can put your money out of equity and you can put in different options. So what are the options we have? Now I'll not go into discussion of detail about this topic, but if interest is there, I'll provide a different video on this. But there are a lot of options like gold, real estate, FD, RD, a lot of things are there in India, bond, and there is some investment like strata and everything where you can buy commercial properties at some investment. That's not small investment, but there is 25 lakhs minimum. So if you have that kind of money, you can go through that also. I'm not sponsoring them, I'm not telling that go and do the strata investment, but this is also an option for you. Like that, we have many options. But idea is that goal is that you should diversify, because if tomorrow things go south and if you have invested in multiple sectors, then the impact of this will be much lesser compared to when you have put money into one particular sector, be it anything, real estate, equity. But if you're not diversified, the impact will be huge. But if you're diversified, the impact will be lesser compared to before, because these things average out the loss. If you are making loss also, it will be less. If you're making profit also, it will be less. So diversification will help you in bad times a lot. So this might be a time where you'll think about diversifying your investment. So this was my personal opinion, personal research, personal data points. If you think it's helpful, if you think it help you to make a concrete decision about what to do in the future, do like the video, do help me to reach out to more people. And if you're new to the channel, don't forget to subscribe and hit that bell icon to get notified whenever I publish a new video. Thanks so much for watching. Stay happy, stay safe.